What's going on, family? This is not financial advice. Do your own research, man. Yep. Let's get to it, man. So we just gonna be talking about this crazy debt ceiling shenanigans that's going on and what it could do for this market, man. So as you know, this debt ceiling has meeting has been going on for a while, and they're trying to come up with a solution. Um, They need to come up with a solution before June 1st, but it doesn't look like that's going to be the case. So they could default, and what that can mean for the market. So the U.S. defaults, obviously, this would be bad. So in the previous time, uh, that was in 2011 that they defaulted on these. The stocks had dropped 15%, and they had a worse week in the stock market that year. So if that happens, the U.S. will be downgraded by default agencies, of course, and which will lead to investors demanding a higher risk premium. So this would decline in confidence of spending among consumers. So consumer spending would slow and the economy would fall into a recession, which would lead to a stock market drop. So technically, we have been in a recession since last year uh, by technicality, but somehow they changed the definition, and for some odd reason we haven't been, but now they're screaming recession by the end of this year. So if they default, um, the domestic and global economies will be thrown into chaos. The U.S. government would not be able to borrow additional funds to meet its obligations, including interest payments to bondholders. So this will most likely trigger um, a default. So this would actually shut down the government, so they will have to come up with a way to uh, have this align with the catastrophic debt ceiling default. So we can get into the charts and we can figure out where this could possibly, the market could possibly be going. What I'm looking for in this market at this particular moment, as we talked about the other day, this is a bearish imbalance. So what I did notice is everything is at critical resistance at this point, and the Nasdaq just continues to push on its own with very few stocks. So we're at this critical resistance. I want to show you why this level is important, and this level is important for several reasons. So we can just bag out and we can see what happened the last time the market got to this level. Um, Oops, wrong time frame. So I'm just gonna kind of zoom out and see exactly where we are. So got levels marked here for potential shorts. So we've been in this downtrend. We got a two-legged correction, as you can see. This is the 50% retracement of the entire move right where we are right now. So a little bit higher, obviously, but right in this zone. This zone has been a key level since uh, what is this? 2021. So 2021, this zone right in here has been a key level. We've dropped from it, came back, dropped from it again. We retested, pushed back above, retested, and pushed on up. Came back to it in 2022. We bounced from it, shot through it, came back through it, and then we retested it, failed, came back above it, rather retested it, tried to bounce again, and then we fell through the bottom. Then we came back and retested it again. So this is the end of 2022, and now we're at the same spot we were back in 2021 of February. So this level is very important, um, especially during this correction period. So we can expect some type of reaction off of this zone. So the Nasdaq does look quite bullish, but we have a moving average here. We have resistance. We have a fib level. and we have a two-legged correction that played out from this downtrend. So we should be expecting some sort of pullback. So we are a little overextended at this point, and the Nasdaq, if you kind of zoom in, they did pause here and they created some nice resistance on a smaller time frame. We're a little overextended, and we should be expecting some sort of pullback. So that's what I'm looking for um, within the next week or so. We should be coming down somewhere back in this zone. We should be expecting a big move down. So we have multiple divergences, and then if you look at the big dogs, um, Apple and the S&P are kind of um, just stagnant. They've both stagnant. So this is the zone that the Apple is at right now. They've created some sort of resistance here. They're kind of stagnating at this resistance zone. So we do have a gap to fill down here as well. So if we do, it'll just be a correction. We could come down to this trend line and bounce. So that'll be one down to 169 area. But this is what I'm expecting. We're at critical resistance again. So this level is close to the high of 2022. So this is where they fell. So we're back up here again, and we've just been going sideways. So we pushed up, we've been in this range. We double topped here, came back, tested it again, pushed down. As you can see, we're just in a range. Fail breakdown, two-legged correction, back up. So we've just been in a range for this period. So we should expect some sort of push down. We're a little overextended once again on Apple. As you can see, the moving averages are way down here around 152 area, and that looks like a decent price, which would be in the middle of this range. So everything is pretty much in confluence with one another, um, and I'm liking potential shorts at this zone. Maybe just for a gap fill. We could push on up, obviously, but I'm expecting some sort of correction. So this is the S&P. The reason why I like it is because we are in a downtrend officially. Confirmation, lower highs. We cannot get back up to the top of this range of bearish imbalance. And if we lose this 410 level tomorrow, we should be expecting a move back down to here, regardless of what price does. So if we get a retest, if we gap down, get a retest, we should be looking to short this area, this 410 area. So I think a close beneath here, 410, we should easily push on down. It should be a sharp move down. So they've done it before multiple times. They even sliced straight through it. They've done it before. So we're just expecting a push down to the bottom of the range. We're not expecting nothing too special. As you can see back here, they lost 410, big bearish candle. Um, they tried to bounce here. We're gonna kind of zoom in. So this is when they lost the 410 level. So I'm gonna kind of zoom in. Hold on one second. Let me zoom out a little bit. All right, here we go. So this is when they lost the 410 level. So this is what price did that day. So we did get a bounce there at 410, and they immediately engulfed, and then they continued to trend lower, series of lower highs, and just push straight on through it like it was nothing at 410 level. So they during the overnight session, they traded down, consolidated at this point, big wick rejection, big bearish engulfing. Um, the first 15 minutes, and then they pushed down, they broke it, they came back up, and big engulfing. So it can be done. They can slide straight through this level. So don't be so bent on this level has to hold. They've tested it multiple times and they still can slice through it, man. Just depends on what the price action does that day. So if they slice through this area, don't be expecting to buy. They are going to shoot down on a bigger time frame, obviously. Just confirm your entries. And the one that I like the most out of all these charts is IWM, so the Russell. Um, they're showing great weakness, man. They're not bouncing. This is a sickness in the economy right now, as you can see. We have a bearish downtrend, consolidation, breakdown, consolidation, failed breakouts. Now we're all the way back down here at these lows, gap to fill at down to 170, and they ended the day with a rejection candle, a lower high, consolidation, breakdown. So I'm expecting to push back down to 170 within this week. So this is what the market is looking like. So obviously, I'm expecting price to come back down to the 52-week lows down here around 162 area. So I don't see anything bullish about this. So this is the showing a sickness in the economy, man. So if we get another breakdown of this range, a measured move will put us. If you measure this range, we can kind of get an idea of where the market could possibly be going. Look at that, back down here to 130ish, 130ish area. So that's what I'm expecting, man. So I don't see any bull rallies. Nothing is looking super bullish, man, besides the Nasdaq, but that can be short-lived, man. So that's what I'm expecting within the next week or so. We could get a push down tomorrow. I wouldn't be too surprised about it, but once we lose that 410 level, be looking to short that zone. So, man, hit like and subscribe, man, if you like this content. Kind of give you an idea of where the market could be going and potential entries um, we could be taking, man. So this is what I'm watching tomorrow. I'm looking for a break of this 410 level. If they gap beneath it, I'm looking for a retest of 410 for possible shorts down to. They could come test to the bottom of this channel. I wouldn't be surprised at all. So if they do come test this, we could be looking for a bounce at possibly 407 area. 407, yeah, somewhere down here. 407, 407 to 408. If they actually validate the downside of this trend line, but my target would definitely be here, down here, 405 to 406 area. Regardless of how long it takes, that is my target. So that's what I'm watching for tomorrow, man. Be careful. This market is treacherous. They've been consolidating, so it's going to be a huge move, man. It's going to be a huge move. We've just been sideways for weeks, just straight sideways action, man. So, I'll see you guys tomorrow, man. Happy trading.